Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze Nifty on multiple time frames in an attempt to find out the best set of trades or the setups that can be used for the next trading session. Right. So in case if you like my simple way of analyzing Nifty and reading the price and also teaching you guys simple price action concepts and how to read the tape, please like the video, subscribe to the channel, share it with your trading friends, and as well as put down anything that you might have to say in the comments box, be it feedback, be it criticism. I am open to both. All right. So on that note, let's just start with today's episode. Uh, Today's episode might be a bit longer compared to my usual videos because this is a month-end video as well. So we'll analyze Nifty on bigger time frames as well. So on monthly, weekly, and then we'll also plan the intraday price action. And I'll also share one tip for you on how to trade on expiry days, especially after 2 p.m. All right. So let's just start. Uh, Today was again a no trading day for me. I'm waiting for the one good trade to click. By the way, today was the last day of April trading, and this was the first month of the new financial year. So, how was it for you guys? Was it good, bad, break even, just learning, whatever it was? Just if you can just put it down in the comment box, that would help me, right? And so, for today's trading, what we had planned was we'll create a long above this particular high with a pullback. And for any low, we'll be looking at shorting only below this particular low. Nifty opened flat and then again moved up. Now, this was a trend line which was coming in, and this was a trade which could have been taken. I had drawn this trend line yesterday, but I wanted this particular swing to be taken out before we jump into the trades. So once again, the importance and of pullback which is there, it cannot be emphasized uh, enough upon. But that is something that I believe everybody should keep a key eye on. So markets broke out of our zone where we had to create a bullish entry, gave us a pullback, but the high was never taken out. That means the long trade was not initiated for us. Post that, the market was sideways throughout the day in this entire zone which we had drawn, right? Now, today was also an expiry. Now, this was the consolidation that I had observed and I had also drawn on my charts. This was actually somewhere around here like this in the markets. And this is something which was signaling that, okay, the prices are moving in a complete sideways range since the morning. And what does this imply? So this implies that people who are into option selling, they would have been seeing good profits around this particular time frame, around till around 2 o'clock, right? And especially when on expiry days, you look at a very sideways and a lackluster momentum from Nifty. There are a lot of option sellers who would have, there are non-directional option sellers, right, who would have shorted some out of money calls, some out of money puts, and then they're just sitting there enjoying the benefit of time decay, right? And once they are around here, there are sensible people who would book their positions around 2 p.m. on uh, expiry, but then there are certain people when the greed takes over and when they would want to capture the whole amount of premium, thinking how much more of a time is left and will capture the entire premium, right? And that is something wherein taking a look at the open chain analysis or the open interest analysis is something which I look at only on expiry days. So if anybody who would have observed today, uh, the open interest was very high at 24,350 and 24,400, right? 24,350 was a good, sorry, 24,300 was a good support, which eventually moved to 24,350 as market was inching higher around these levels. And now, see, there are two scenarios which might have happened or triggered today. One is this is a typical expiry move wherein market around post 230 went up, took the SLs of all the call sellers and then again moved down, taking the SL of the put sellers as well, right? So initially people who would have shorted calls and with this particular move, their SLs would have been triggered. Put sellers would have been happy, enjoying a much more decay, and then suddenly this premium with this dump which comes in, their premiums which would be near zero or near the end of their trading life cycle, because they're expiring today, would have seen a massive, massive jump, right? Now, there are two theories which might be there. Either this is a market manipulation move to trap both the call sellers as well as put sellers who were there enjoying the decay since the morning, or the dump which has come down in the market is something related to something that the big players know, which we are right now unaware of, right? There are two theories which can be into the place right now. So we'll not predict anything. We will just follow the price, and we'll see how it trades on Friday, the 2nd of May. Tomorrow is a sorry, I will be uploading this video. I'm recording it late at night, but I'll be uploading it on the 1st of May at 9 in the morning. And today is a trading holiday. So please use this time wisely to analyze your trades of the past month, and also see where did you guys fuck up, or what needs to be improved in your trading style, or maybe in your trading setups, right? And again, now we'll start with the analysis for the next trading session. We'll start with the monthly time frame first. So on a monthly time frame, I'll remove the drawings. Things look good as of now. It is a good monthly candle. April gave us a good move of around roughly 2,700 points, which is a very good move, a very bullish candle on the monthly time frame. Nothing to be scared of, right? So people would be scared of looking at the small fall around the end of the trading day, but that is nothing to be concerned about. On the weekly time frame as well, we have formed a higher high. All we need is a is a higher low, and then maybe this trend can continue upwards. Or if this is a trap, then this would be in the coming weeks, we'll see a breakout, a failure of this particular breakout, and then that is something which we need to be taking care of and concerned of, right? As far as on a daily time frame, we can see the last week was completely in a sideways range, lacking momentum on each side. That is the reason we could not find good trades. Small intraday scalps are okay, but I believe there's something which good trader craves for, is a good RR trade, wherein with a small risk you get a good reward, and those trades they come seldom, but when they come, they give you a good RR, right? So those are the trades that we wait for, and right now market is in a sideways momentum, so we need to wait for that good particular trade. Now on this particular chart, Nifty might be looking like a doji where the opening is near the closing, but this is just an adjusted closing just because the fall came in the last 15-20 minutes. This is an adjusted closing, and if we look at on an intraday chart, the closing is roughly 243, 334, almost 90 points down on the chart where the Nifty charts have closed. So how do we prepare this particular plan of action for Monday? Now, if we take this particular range as the sideways momentum, I'll just resume my drawings, and because Nifty has also given us a higher high, we'll once again take the help of our friend Fibonacci. Right, so this is the on a bigger time frame. If we look at on a hourly time frame or a 4 hourly time frame, we can see the structure is intact. There is no particular problem. But if we take connect these low with this high, so this is the retracement below which we above which we are uh, completely safe. This is normal retracement. Can be treated as a normal retracement. Below this will be a bit prepared to trade actively on the downside as well. So for Monday, we'll sorry, more not for Monday, but for Friday, our plan of action has to be very, very simple. I'll just move this towards the day high. What we can also see is a just ignore this, no, not much of a use. We can look for a trade above this particular high with a pullback. And for a short trade, yeah, we will wait for a trade below this low. We'll delete this line and we'll look for again a short trade with a pullback, but we have to be cautious because this will be acting as a support zone, this particular price action point. And once we are below this particular price action, I'm repeating this, not marking anything on the charts for now, but if we are below this particular price action, with this particular level, and we might see a massive gap down, maybe there has been some bad news coming in from the US markets, but they seem to have recovered. Perfect. Nothing to worry about. So earlier in the day, I went out for a movie with my family, and all I could see was in my trading community and trading friends about the US market. So the US economy has contracted for just a second. Right, for the US economy contracts for the first time in 3 years, which is a big negative for the market. And plus, there is a jobless data claim which comes out on every Thursday in the US, and those were below the expectations. And that is something which the market might have taken negatively, but then ultimately the market has recovered. So tomorrow is a holiday, so this price action will not define much how we open up on Friday, but it is tomorrow's price action on the US markets which will define how we open up on Friday. But say, for example, we open with some gap down already, we have closed near the lows, and this fall was around 200 plus points. And if we open with some gap down, we are below this particular range, we will need to look for a short trade uh, with proper price action. All right. And so this is again, this was a support area. This has already been tested once, twice. Let's see what the price shows us. We'll not be predicting anything that this is what is going to happen, but we'll, like we always say, we'll be prepared for anything. We'll not predict anything, and we'll trade whatever the price shows us. All right. So this is it from my side for today. This line is also of no use right now. Uh, I'll see you guys again post the markets on Friday. Till then, have a good day. Cheers. Thank you so much, guys.